Hey traders, Nick here looking at oil. If you've been with me for a while, you know that I'm not a fan of the oil prices up here. Not because I'm short oil or anything like that, just from a concept perspective. For a while, we were stuck in a below $55 because it was OPEC controlled heavily, and that's not too long ago. I mean, this is a period of time where that was the case, where too high and it was bad for OPEC pocketbook. I mean, market share. Too low was bad for their pocketbook. So then suddenly we broke out of the region, the range, and we haven't looked back since. So what now? Okay, so before we move on as to what now, let me zoom out to see where that green zone came from and see if we can speak intelligently to it. Okay, so you can see how we were stuck in a region. Ignore all the lines, just a region is what I want to concentrate on. And suddenly we broke through the lid of what was $55. And most recently it was on rhetoric of geopolitical risk, etc. Also, some people say that it's manipulated higher because Saudi Arabia, really, which is OPEC, wants to bring their oil company to market, at least part of it, for like $1 trillion. And the higher the oil price, the higher the valuation of the company, because it's based on assets that have something to do with oil, right? So, okay, up here, what do? Do I chase it? Do I not chase it? Is there a risk? Okay, so I have inputs on all of these, and I don't want to chase it up here. If I'm not long already, I'm not going to jump into it long, and I'll show you why in the longer term. And but that doesn't mean I short it either. But if I do chase it, and when I do chase it, it will be a trade, not a valuation call, meaning I don't think it's going to go higher from here. Therefore, usually if I think a stock is undervalued or valuation of the line is going to be higher, I will buy the stock or calls or whatever. In this case, it will be just a trade for price action. So valuation aside, let's look at the technicals. I'm going to go back to a weekly. You can see that the 2014, I think, started the whole thing falling off a cliff, and somebody said we won't see $50 or $60 or $70 back in my lifetime. It just sounded reasonable. So what now? Is there an opportunity? So usually what people like to trade, this is a longer look. This is a monthly, just to show you where it was at one point. People like to trade things like ETFs that have to do with oil companies. So I'd rather go long oil companies rather than oil, because yes, they move with oil, but at least they have some intrinsic value to the company itself. So if oil falls off a cliff, the company won't follow it dollar for dollar. So a few popular ones have been the XLE, XOP. So let's look at the XLE, and this is where the opportunity comes in. All right, so this is a weekly chart of the XLE. XLE is a representation of a bunch of companies that have to do with oil, but that's a really important thing. I want to show you here. This one is, I believe. So that's what's in the XLE. 22% of it is Exxon. Chevron is another 17 or 18%. So almost half is the top three make up half. Schlumberger, ConocoPhillips. You can see the companies. I'm going to enumerate them. But the bottom line is that these are about half. So I better know where these are before I invest in it. Having said that, we'll look at that a little bit later. But here's the thing: is technically, it's a bullish pattern. So let me see here. This was an argument that I was doing on Facebook. We'll erase that. All right. So this is the same, so we can chalk it up. Technically speaking, we have a top. We have a top. And we're approaching that same top. Pretty darn close. Usually, when this happens, you get a big rounding bottom and a smaller rounding bottom. Now, this is months, right? You get a cup and handle, right? Cup and a handle. And usually if they break through and close higher, this is weekly candle, so I need at the end of the week for them to close higher, then there should be a rally about this size. So I'm looking somewhere here, just looking at this portion. But for me, I usually look left before I say, okay, this is where it's going to go. This is called a measured move. I look left. Why? Because I'd like to see where there are stopover points, potential resistance. Is this really breakable? All of that. So I look left and see, okay, this is the neckline I'm talking about. And look how important it is. What's this? Right? Somebody else thinks it's important. And I should expand it more. I will expand it more and see it's also a pivot point here. So this is definitely important. So it won't be easy to break it. And even if they do break it, where's the first stop? It'll be here. So yeah, this will be the target, but this will be a stopover. There should be a lot of resistance here coming into 84, somewhere around 84. And so it's not a slam dunk. So I personally don't want to jump the gun. You know how they say buy high and sell higher? This is talking about momentum stocks. I don't want to chase it until it breaks above. It's not natural to do for me. I force myself sometimes to chase something, and my hunch tells me don't chase this one, and I'll show you why in a little bit. Okay, so you get the point. You get this point. All right, so the idea is that yes, it could go up on a breakaway, but I'm not looking to chase it personally. So let's expand a little bit on a monthly basis and see if we can see. All right, boom. So this is the point in time we were looking at, the neckline of sorts. So it has been a contention point over the monthly period of time. All right, so back to the weekly. That's the same chart. All right, so there is a technical opportunity. So let's see if I can get hints. All right, so I said Chevron is one of them, Exxon is the other one. That's what's inside of it. All right, so you can see the same opportunity exists in Chevron, but there's a top here, and they need to exceed that top here. And it almost mirrors the same thing. Exxon. Did I say Chevron? Okay, so Exxon is a different animal for some reason. I don't know. There must be a fundamental reason. So this argues for a breakout. So because it's not frothy and it's not going to pull down on it. SLB was another one, Schlumberger. So same stories. So CDX, for some reason, is the best looking one, and that actually mirrors the XLE all by itself. All right. Having said that, I have another hint as to why I don't like this upside. The USO is the oil, basically, the United States Oil Fund. It mimics. It usually goes with the price of oil, right? And it's coming up at some pretty tough levels. So, whoops, that's too long. I don't like the odds of them being able to break from here. If I look left, this zone was, this fall was pretty fast and emphatic, and they tried to get back, and they were rejected. Not only rejected and pushed even further. And this is they resisted a few times before they broke. It comes from a point where they also resisted a few times before that. So it's like a confluence of bad news, right? So falls off a cliff, dead stop, bounces a little bit, falls really fast, dead stop, bounces even better than this time. So this was, very good. Then falls even faster and longer than the past two times, and boom, bounces, holds the line. Guess where? Exactly where we are right now. Okay, and then guess what happens? Falls as fast as this time, much faster than these other two, to a new low, and then spends months and months and months and months down here. That's the consolidation zone that I showed you earlier in the other chart. And here we go. It comes back up to this first stop point here. Fails a little bit. Comes back. Now it's creeping up towards this one. So this is the reason why I think it won't be a slice through. So I'm hesitant. And that's why I definitely want to see a breakaway before I chase it higher. And if that means the whole market is running higher. And I bet you I'd find something else to chase that doesn't have that much downside exposure. So this is the XLE. I remember trading this for us successfully on the way down several times on bounces and stuff like that. But for me, it's not an obvious entry point here. Somebody sent me a request, can we trade oil at the XLE or XOP? XOP is another one about the same way. I traded that one well too, but for the same reason, I'm not looking to chase it. This one is not heavily influenced by one company or another. Okay, so if I go in here and I'll steal this one from XOP. Okay, so you can see they're 2%, 2%, the whatever is in it, they're not dominated by one or two companies or three companies. So spread the risk, so to speak, but same concept. They all look the same. Yes, they look exciting technically, but on that note, I want to see a breach and close above before I chase it higher. And I'm not inclined to do it for myself. I think there are better entry points. Here's oil. Let me zoom back in on the 1 year. So here's oil. That is a long run without, I don't know, without a real reason for it. It's not like we're demanding a lot more oil now. They say they're working off of inventory real fast, but today I see a rig counts, and it's up another 10 in a week. So rig counts is important for future production because rigs are, they basically drill it and tap it so they can put the faucet in it down the line and turn on the oil. That's how I understand rig counts are. So it's not like new oil that comes to the market now. It's future oil supply. Plus, there's the Iranian thing going on, and if people are nervous about the Iranian oil going offline, but if we noticed what the Iranians said as soon as the U.S. left the deal, they said, we'll continue working with our partners in Europe, and we'll stay in the deal with the Europeans. So they want to stay in the deal. I don't know. It just seems to me like if it's overblown the necessity for higher oil prices right now. I'm not an oil expert. I'm just giving my opinion here. So me, from a trading perspective, yes, it's an exciting trade to catch on a huge cup and handle, but guess what? Why not catch this cup and handle that we've been talking about, or the Qs? I think if oil is running and oil stocks are running, which is what the XLE is, oil stocks running, this will be even running faster. That's my opinion. Or IWM, that's another cup and handle. See that cup and handle? So that's my personal preference. It's like, where do I want to put my risk? All right. That's my opinion. If you have any follow-up, as far as trading it, I would do a debit call spread for the XLE, either buy calls if somebody's really aggressive about it, or a debit call spread at the money or near the money, out in time, at least June. I don't want to run out of time and have missed the move, especially that I showed you that there are some lines for me to see crossing, and this is probably one of them here. So here's a gap open. I don't like it when we just leap higher without any real check back. This is a bullish pattern, like a Z check. What are they called? I can't remember now. Anyway, J hooks, I think. So it still fits within the idea of this is a breakaway. But for me, if I zoom out, same here, same chart on a weekly basis. That's that same area where we're looking at. I want to see a close to break the neckline. Nick signing out. If you have any questions, let me know.